it would be an interesting stock to watch. Anything is possible with Ranbaxy these days. Manish Sonthalia joins us. Morning, Manish. Are you scratching your head trying to figure out that how could Ranbaxy mess up so much? I mean, this was the company of 2005, India's most valuable pharma company, the bastion of Indian pharma sector.
Yeah, Nikunj, I mean, it has a lot of problems on its hands. Now it's only one US facility, which they have to cater to the requirements. And I don't think there is enough manufacturing capacity for them to take advantage of Diovan and Valsite. So, the stock is going to react very negatively today, and it adds one more problem to the already list of problems which they have. So, it's a lost case for the time being. Considerable amount of time will go in rectifying the US FDA issues. So, it's just an avoid, I would think.
And Manish, for someone who's holding Ranbaxy, is it a complete exit whenever one gets the chance?
Absolutely, no doubt about it.
What about the rest of the pharma pack though? I mean, we've seen fair amount of traction in newer names like a Biocon, for that matter, Aurobindo Pharma as well. What is it that you're liking out of the mid-cap pharma space?
So we like actually IPCA quite a bit, and a few others are there on the radar. We are doing some more work. Interesting would be to watch out Cadila, where they are doing a lot of things. The ANDA pipeline is a 190 molecules plus. They have done a lot of capex. They will see injectables getting some sort of monetization in fiscal 2015. So that's one interesting name to watch out for. Others would be your Aurobindo, the likes of Biocon, etc. But as of now, we have just zeroed in on IPCA as one of the top mid-cap picks.
Manish, stay with us. I'm going to take a quick detour and go to Ajay to pick up all the dealing room buzz.
Good morning, Nikunj. KSK Energy, one stock which we keep discussing quite a lot. Yesterday saw a fair bit of institutional action. In fact, GMO has picked up 40 lakh shares, which amounts to just over 1% of the total equity of 37 crore shares in KSK Energy. Watch out for that one. A lot of traders on the street would be observing that. Apart from that, last evening, along with the KN results, important clarification coming in from the company that they have no proposal of merging Hindustan Zinc with Sesa Sterlite right now. Remember, ever since Cabinet Nod came in for the residual stake sale, there was a lot of conjecture on the street regarding possibility of merging Hindustan Zinc with Sesa Sterlite. So clarification coming in, probably Hindustan Zinc could react to that one as well. And Radico Khaitan, again one stock which is in focus because of talks with Suntory. Yesterday, Rare Enterprises has picked up 5 lakh shares in that one at current valuations. And a lot of analysts I spoke to regarding this particular deal say that, despite of a lot of big HNIs checking into this counter, valuations wise, this counter is still very cheap compared to United Spirits, and if re-rating via overseas big large player is something to play for, it is better to get into Radico versus United Spirits, where the story is mostly unfolded till now. So that is also something which traders are keeping on their radar.
Ajay, the interesting bit is that smart guys are moving into not mid caps but small caps and micro caps. KSK Energy, GMO picking up 50 lakh shares, market capitalization not even 2000 crore. Rare Enterprises moving back into Radico Khaitan, market capitalization not even 2000 crore. So I think the smart money is buying into small and mid cap stocks.
Well, that's correct. As they say that 2014 could be the year for small caps, isn't it?
So Ajay, thanks a lot for that. Manish Sonthalia, 2014 could be the year for small and mid cap stocks. So which are the small and mid cap stocks you are buying? Because you run a mid cap portfolio, this could be your year.
Yeah, I mean, the mid-cap index per se has been outperforming of late. I think it's going to continue that in the calendar year 2014, and for the simple reason that valuation gap was quite big. It has narrowed down, should narrow down even further. So, I mean, there are a lot of stocks on the radar. The whole point is what themes you play at this given point in time. The investment cycle theme, when is the inflection point, etc., etc. So I think for the time being, we are keeping a close watch on how the result season is panning out for the mid caps that we hold. Obviously, some of the consumer names have come out with numbers, and you know that we are overweight on that space. But having said that, some of the names that we own, something like an Imami, have continued to maintain a 30% profit growth in spite of a slowing down in the top line growth. Top line growth was just about 6-7%, but they have been able to defend their margins, etc. So how the result season plays out, and post which we'll be in a better position to take a call whether to play the investment cycle theme or you can postpone it for some more time to come.
Okay, let's also bring on board Mitesh Thakkar and quickly get in his trading ideas as well. Mitesh, what would you recommend?
First, we'll begin with a short-term sell on Bharat Forge, which is in the last few occasions failed to get past 350. So minor topping pattern is forming. Sell with a stop at 346. Look for targets of 330. Havells is a sell with a stop at 791 for targets of 745. HUL though remains a buy with a stop below 559 for short-term targets of 585. And HDFC was a very strong performer but needs to break above 860. So if it can do that in a weak market, buy that with a stop of 849 and look for targets of 885.
Okay, let's quickly recap as well the trading ideas coming in this morning from Ashwini as well as Sandeep. Ashwini's got a buy on United Breweries, DHFL, Welspun Corp as well as a stock that he likes. He's also got sell on UPL, Biocon as well as Dabur. What's Sandeep Vagle recommending then this Friday morning for intraday ideas? He's got a buy on Adani Enterprises, United Breweries, Oracle Software 2 is a stock that he likes. And he's also got a buy on Indian Hotels and a solitary sell on M&M.
Ashwini, yesterday was Tata Sponge and what a call. Which is the big one today?
I think Diwan Housing should do well. That's a buy with a stop of 230, target of 252.
Mitesh?
I think I'll choose a sell on Union Bank. I think this stock hardly participated on the upside and has given a fresh breakdown on the downside. So sell with a stop at 123.5. Look for targets of 113, possibly 108.
Alright, gentlemen, stay with us. 60 seconds to go. Last trading day of the week. What are the kind of global cues we've woken up to? Unfortunately, a lot of red. The fears that Chinese economy will slow down. US markets are down, or US markets were down rather in a meaningful manner. None of the key markets in Asia are off to a great start. Even though optically yesterday we touched a new high on the Nifty, this market really technically lacks any kind of a momentum. Fundamentally, there are no triggers. IT stocks have started consolidating and banks are not showing any signs of fall of buying. So the market action really is restricted to 8, 10, 15 mid-cap stocks and about 25, 30 small-cap stocks. Since we don't have any big numbers today, all the stocks, all the news attention will be centered around Ranbaxy, and Ranbaxy is now really struggling to follow the best practices which have been laid by US FDA, because now an API facility has also got hit because of the ban by US FDA. So Ranbaxy will be a stock which will be in focus. As a theme, it could be IT, and as a trend, let's see if capital good as a category sees some fall of buying. 45 points down for the Nifty. This is a start, and this is a start on expected lines. That is what SGX was telling us. 6,300 on the Nifty could be coming under pressure. And where is Ranbaxy? 15% down for Ranbaxy. Is the market reaction slightly harsh? I don't think so, because when APA facilities are getting hit, that just tells you the kind of manufacturing process this company is following. So I'm not surprised with the sell-off at all. L&T yesterday was the big star, and it managed to buck the trend. It made the capital good index look good, but today L&T no follow buying, 1028. Infosys touched a fresh high. Yesterday money moved out of TCS and HCL Tech. Today Infosys also is down by about 14 points. And then whereas TCS and HCL Tech, two real performers which are taking it slightly easy. So green tick for HCL Tech, green tick for TCS. I want to go back to Ranbaxy once again. And we thought that, if I thought that 15% was scary, look at the screen again. It is 16.5% now.
Yes, it's a breakdown. In fact, you've hit the October lows post this US FDA ban for Ranbaxy, 350. So that's a huge amount of wealth which has gotten eroded on this one today.
I also want to see what Kane India is up to post its earnings. While the numbers didn't quite meet the street expectations, the company says they are on track to meet the FY14 exit guidance of 2.5 lakhs BOEPD. So Ken has started off marginally in the green. It's a mixed bag of sorts, so to speak, and now it's only picking up in trade. Although the brokerage reactions have been a hold and overweight largely on Ken, and they do maintain a positive stance on this one. Z Media should have had a negative market reaction. Oh my God, it's a nosedive situation for Ranbaxy, 19% lower right now, and doesn't seem like the selling pressure is going to stop anytime soon.
Yeah, the stock has got completely derated, and I was looking at the institutional ownership for Ranbaxy, and a lot of institutional investors are still hoping that this company will bounce back because they have a Japanese management in place. But now I think those investors are simply throwing away the stock now. So irrespective of the price now, I think institutional investors are in a mood to exit. So it's a selling stampede. Nobody is bothered about the price or the level of exit. They simply want to exit. 20% down for Ranbaxy. Sad to see that Ranbaxy 7-8 years ago was India's most valuable company. Between 2008 and 2013, Sun Pharma is appreciated by about 6 or 7 times, but Ranbaxy has really followed the other trajectory. The open offer came at about 500 rupee plus, and between 2008 and 2013, Ranbaxy is actually down by more than 15%. So no point in trying to understand what is the next price point, what is the next price level, fundamentally what is the fair value for Ranbaxy today. It's all about this selling stampede. Manish Sonthalia, are you with me on Ranbaxy?
I mean, absolutely. One was left scratching his head as to how Ranbaxy could be trading at 400 plus, with all the problems which they have had in the past. And now it's just valuing the base business, and plus where do you get the manufacturing capacity from? And if you outsource manufacturing, the margins are going to take a further hit. So, I mean, I think the stock price movement is perfectly justified, and maybe there is some more to go on the downside. So, I don't think there's anything abnormal in the price movement of Ranbaxy.
Ranbaxy, you don't think this is undue panic and it's a good time for a medium term or a long investor to kick in, because best money is made when you buy when there is outright panic?
I mean, you can argue it that way, but we have seen the case with Wockhardt, isn't it? But US FDA issues don't go away in a hurry. You have seen umpteen examples. You have seen Panacea Biotech. We have seen, Wockhardt, now Ranbaxy. These things take a lot of time to resolve. So minimum 1.5 to 2 years would just go in resolving these issues. What do you do with the earnings in the interim period? So there's going to be a lot of time, and the stock may just languish, and there may be better opportunities to buy the stock. I mean, that is what I feel.
Let's just see what the CNX IT index is up to. Meantime, while Ranbaxy, of course, is bleeding in trade, and it's important to note that the CNX IT index is actually holding out in trade. You've got HCL Technologies, which is sitting at the top of the pack. TCS as well is looking good. It's holding up by about 0.6%. And guess what? We're actually outperforming the rest of the global peers as we speak, at a time when the US equities were down about almost 1% across the board. Asia as well is bleeding in trade. It's our markets which are actually resilient. Ranbaxy aside, the market is showing you some resilience, and we're actually holding on to 6,300 as well. Just want to get a view, Ashwini, from you on the CNX IT index and the resilience that index is showing right now.
See, it's not resilience. It hit a low of 10,036, and from there it's reversed in the first 5 minutes, and right now it's sitting on 10,100. So this is a very strong early indication that even if the market falls, CNX IT could outperform. You can see that in individual stocks also. Meanwhile, Nifty is also trading near the high of the day. So CNX IT is a fairly decent buy right now, and maybe by end of the day, as we can see, Asia also is showing very mild kind of reaction to the US fall. Chances are CNX IT could appreciate today and maybe get past that 10,165, and that will get it into new territory.
So IT is the trade of the day, but Ranbaxy clearly is the stock of the moment for all the wrong reasons. Vivek Kumar, research analyst with SBI Caps, joins us. Vivek, I'm not getting into why the stock has fallen. My question is today's price action in the stock justified?
I didn't get you, sir.
Vivek?
Yeah.
I can hear you. I want to hear your views on today's 17% sell-off in Ranbaxy. Is that justified, or is this an opportunity to buy?
No, I think what clearly that we need to understand is that this import alert at the Tonsa facility is very critical. They were sourcing 1/4 of their U.S. Generic sales from this particular facility, which means that now they would not be having that option. So this clearly hurt the plans to scale up the U.S. As some more filings in the U.S. have to be getting affected from these facilities. And I do believe that when I say 1/4 of the filings was backward integrated from Tonsa, which means that if this facility is not there, they will have to rely on a third-party sourcing, which means that it would be a further there would be further margin cooperation, which is expected to happen. Okay? This facility now would be a part of the consent decree, like the other facilities like Ponta and Devas. And we see that there would be extremely slow recovery on the operating margins, which earlier the story was building onto the street. So there is additional cost which they have to shell out on the compliance. They have to acquire the third-party consultants and get the overall facility get reviewed. So I think there's 2 to 3 years process, elongated process, which would have to they have to adhere to. So I think this is extremely going to be this does raise a long-term concerns over the stock, and we do expect that the stock correction is justified, and whatever the target price that was there on the street should get further depressed, almost let's say about 20-25% in ISL. But I think more or less, I think it's overall what is more important for us to understand that this is definitely going to be more of sentimental impact, though there has been a financial implication to the extent of 15-20%.
Right, Vivek. Thank you for that quick take. Manish, I know I'm extending my conversation on Ranbaxy, but money will move out of Ranbaxy. Where will it move? Will it go to Aurobindo Pharma? Will it go to Sun Pharma? Will it go to Lupin?
I mean, all these names are worth putting money in. It depends on what comfort levels you have for what stock. So clearly Lupin and Sun Pharma stand out in terms of quality of earnings, plus the growth which they are exhibiting. IT continues to remain a favorite area for buying, and my sense is if one wants to play the capex cycle improvement, then one can do so through banks. So majority of the people on the street are underweight the banking space, and maybe it's time that one moves to equal weight or slightly overweight position. I mean, there are problems in banks, but clearly value is emerging in some of these banks in a very big way.
So Manish, what is the core of your portfolio? You own consumers, you like IT, you're happy to buy into banks, and you've revisited cyclicals. So what I'm trying to understand from you for 2014, what strategy are you playing? Are you betting on global growth, local recovery, domestic consumption, election upside?
Everything.
It cannot be everything. How will you make money if you bet on everything?
Yeah, so it is different themes at different points in time, but all these themes are there at the back of your mind. For the time being, I think it is global growth which is top of the mind recall. So, IT and pharma continues to be an overweight stance. I think domestically, if things are improving and if you want to play even on the political part of it, that better governance would mean that your GDP should expand from the current levels, then you can play that through banks, and even the capex recovery cycle you can play through the banks. If you don't want to just bet in on individual names in the capital goods and the infrastructure space. So I think for the time being it is consumer, hold on to the names because they are a sweet spot, and earnings growth is coming about, although slightly on the lower side, but I think they would muddle along the way. And the real pull on the portfolio on the upside is going to come from your IT, pharmas and banks.
Did you
I was just going to say that. Did you say banks, Manish? Especially after the kind of earnings that we've seen from most of the banking majors right now. What makes you bullish in the sector?
So HDFC Bank, from 30% growth to a 25% growth is a very good number given the environment that we are in. So HDFC Bank continues to be there. We like some of the other names, though they have yet to report numbers. So it could be an ICICI Bank or an Axis Bank. In the mid-cap space, it continues to be a Bajaj Finance, a City Union Bank, or J&K Bank. In the public sector names, what are there on the radar are Bank of Baroda, etc. So it's a whole number of stocks in the banking space which are offering good value for money, given the growth and the asset quality which they are exhibiting in such a difficult environment. So if the environment moves for the better, then I think these names could really outperform.
Okay, Manish, let me give you some good news. One of the largest holdings, Page Industries, has hit another 52-week high, 5760. Do you have any plans to sell this one?
Not in the immediate future, Nikon, because I have been reiterating that if the market for this industry is growing at 15% and this company is growing at 35-37%, the high P multiples would just sustain, and the competitive advantage for this company is just too big, for competition to catch up in any time in the near future. Maybe next 5-10 years, 1 decade would go for the nearest competitor to compete and set up the advantages which this company has. So in the interim, it's going to be advantage Page Industries all the way. So I have no doubt that the stock has further upside from the current levels. I have no intention to sell this stock anytime in the near future.
I'm just going to establish what Page Industries has done in last 5 years, and it's a consumer name. They are the franchisee for a big garment brand, Jockey. In 2009, which is after the financial crisis had got over, Page Industries was at 500 rupees. Now it is at 5755. It's a 10x in last 5 years. So my question is that the stock is 10x and you're happy to own it?
Absolutely. And in fact, we are buying for new money which is coming to our portfolios.
Do you have a price target for this one?
No price target as long as it doubles its profits every 2.5 years.
Just see the CNX IT index started off marginally higher and it's only picking up more and more steam as we speak. It's up by about 0.5%, and this is one sector which seems to be really providing that cushion that the market needed right now, which is why perhaps we're being able to hold on to that 6300 tick, 6333 for the Nifty futures, and the spot as well is latching pretty well to that figure. Barring Infosys, which is now just about flattened out and it's on its way to recovery, other names like an HCL Technologies, TCS are only holding up well. In fact, mid-cap IT as a space as well is looking pretty strong. Some of the names just flashed for you on your screens. Wipro too is looking good by about 1%. Tech Mahindra, can't really call it a mid-cap, but it's up by about almost 1% or so. Hexaware too, 0.7% in the green, and Glenmark ahead of its earnings is up by about 0.7. Adani Enterprises, the big mover from yesterday, that too continues to look good, up by about 1.5%. So these are some of the stocks which are really supporting the market right now. But Manish, come next week and we'll have the policy action as well to deal with. If indeed it's a status quo, do you think the markets would be overjoyed by that decision of the RBI, or do you think that is something which is already in the price for the markets?
I think markets are not building in any easing of policy rates. I think what the markets would be watching out for is easing of liquidity conditions. So any cut in SLR or any other liquidity enhancement tool would be taken as positively. Otherwise, it's a status quo for the markets. Markets are not building in any decrease in policy rates.
So Manish, let me ask you your favorite question. Based on the historical growth rate, which are, apart from Page Industries, which are two more stocks which you are happy to own for next 3 years?
iShare is something which we are quite positive on. We even like Bosch, given that your auto cycle will actually start to move up sometime, in the fiscal 2015, and earnings growth has been more or less flat in the last 2-3 years. So in the autocom space, that is one name which looks quite good. And some of the banking names, J&K Bank, City Union, Bajaj Finance. These are some of the names that I'm quite optimistic on for the next 1-2 years.
J&K Bank, and I wonder why. I mean, it's a small bank based out of Jammu and Kashmir. They don't have reach, they don't have size. It's a PSU bank.
No, but if you look at the parameters, it's all HDFC Bank parameters on all the ratios, and you're getting it at maybe 1/3 the valuation of what HDFC Bank. So look at the provision coverage ratio, more than 90%. Look at the CASA ratio, 40%. Look at the NIMs, 4%. Look at the growth, 20% plus. Look at the ROEs, 20% plus. And the biggest advantage is that 60% of the business comes from the state of Jammu and Kashmir, where the cost of deposits is quite low, and they are lending at normal lending rates. So the spread on the J&K business is very, very high. And that is what is giving them the competitive advantage which other banks do not have in a big way. So that is helping them earn superior profits, superior growth, lower asset quality concerns, because they are more into retail lending as opposed to project financing. There is some project financing, but it's a small part of their overall loan book, and the provision coverage ratio, the dividend payout ratio at 5p, I think there's a clear mismatch.
Manish, always lovely to have you on 18 Now, and I certainly look forward to much more of you going forward.
Thank you.
Ashwini Gujral, over to you for your thoughts.